Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, the 5th of June, 2024, and we're getting on right now to 5:35 p.m. Central Time. Well, an update today for a change in the metal markets, and they have been under tremendous pressure as the markets have just basically caved in. Started with the platinum market peaking out, but the cave-in came in the copper market, and still here it is down 60 cents roughly from the high that it recently made. Silver's come back. It's now back over the $30 an ounce area, and the gold has stayed actually pretty stable here through most of this. Yeah, it sold off from its highs, but it didn't crash per se. But when we take a look at the energy markets, well, we've had a bunch of reports that keep showing builds happening in the U.S., both API and EIA numbers. Bonds and notes, well, you're back to a 4.3 in the 10 years, so that's an interesting number. Now, what we have coming out tomorrow, and we'll talk about today what happened, the Challenger Group will come out with their planned U.S. employer cuts, and they're looking for them to, in the April report, employers had announced 64,789. We don't know what they're going to come out with now for the May report. The European Central Bank monetary policy announcement comes out around 7. It's followed by a press conference with Ms. Lagarde. It is widely expected that they will go with a quarter-point cut. It's always in the wording after that. Today, we saw the first big move came out of Bank of Canada. They went with a quarter-point cut today as well. So they were the first out of the box. Now you got number 2. Will the Bank of England be around the corner? U.S. April trade deficit will be released on Thursday morning. They're looking for it around $76.5 billion. The weekly jobless claims are coming out. They're looking for an increase of about 1,000. We get the revised non-farm productivity data coming out at 7:30, and then we get the natural gas storage. And as the heat's building in the West and it's going to start moving through the U.S. at different points here, we'll see how much of a draw there comes in that nat gas. But today's event was all about a couple of things. Number one, the market looked obviously at what the ADP numbers were, and where the ADP numbers sank, where you're seeing the private payrolls didn't jump. And by the way, I don't rely on those numbers very much. They're all over the board. But when they sank, because the JOLTS number was weak yesterday, that's what the market wanted to see. The nail in the coffin, in my opinion, wasn't U.S. reports after that. It was the Bank of Canada making its quarter-point move. Traders thinking that puts pressure on the Fed. What they're hoping for is the trifecta this week. The trifecta being the U.S. jobs report on Friday will come out weak, and that puts into play the possibility of September, but in traders' minds, most certainly a December rate cut. But September, very possible if the data for then June and July come out weak. That's what traders are going to look for. So they want to make certain that the next series of reports that are coming out now, starting with the jobs and CPI, PPI, and so on, will do it, and then the market's going to look at it. But do remember what the market's missing. The reason you're cutting when the Fed does cut is because the economy's at the other end. So it's gone up this ladder. Now it's rolling like that. And traders will then have to say, well, wait a minute, if we're cutting, at some point this psychology will hit. Is it constructive? Or is that happening in order to support the market and just make sure that we get a soft landing and then corporations can say it's business as usual? We're about to find out, I can tell you that. When we look at the gold market, it's up about 1.38% now into Thursday's trade. You can see how the market is sat here. And obviously, you can see it didn't really go down all that much when you look at a closing chart. You did come down here from the 24.75 level into a $100 an ounce break. Got into the 2340s, and you're just sort of sitting here right now trying to figure out the next move. In order to say the market is out of a downtrend, you've got to take the swing line high out here. You're not far from it. Another $10 probably does the job in the marketplace. But that brings you then up to $23.87. That's why I said about $10, which is the 18-day average of closes. And that's where your battleground is, because the attack of it now is going to be the question. Can it get up and stay over it? Or does it get there and find another brick wall waiting for it? That'll be what we all have to look at. When you look at Bollinger Bands, they're far away from the market, so they're not acting like they're the market that's in play. And momentum had been oversold. You're getting a correction. To get more of one, this number has to lift. And typically the way that happens, if prices hold and give you small rallies. So I can see that 18-day average being a number in play. When I look at the gold-silver ratio, as we were back here, I said, watch out, this is where silver now starts to lose to gold. And you've gone right to that 18-day average, and now you're in your battle play. This is the first time it's been there. When we look at the silver market compared to gold, which is trying to get up, this market is still bearish. The problem for the bears is, do you really want to sell a market that's not embedding in that oversold? That's the only question I think they have. I think they're going to get emboldened around the 30.67 level. If the market got back over 31.04, they'd run. For me, that's a lot of risk. 37 cents roughly is way too much as I see it to call it a normal trade. In the copper market, this break is very important. This wasn't a flash break any longer. This is a market that structurally something bad has happened to it. Was all the bull news that I got bullish on and other people? Right here. You got to ask yourself, was that it? Fundamentally, no. Chart-wise, absolutely. Terrible call. And now I'm not in the camp that is sitting here saying, well, now I can't wait to be buying. I think this will be a core position. This break's too severe. I don't know what you do with it down here. I'm not saying I'm turning bearish yet. I am saying I've lost my bullishness. So how's that for honesty through there? In the platinum market, higher high, lower low, the market comes down to the lower Bollinger Band. So now I can see where you're fighting. And the fight's going to continue to be, like I said, right through Friday as the markets try to figure out, gee, if the U.S. Is going to cut interest rates sooner, is that bullish or bearish the dollar? How does that translate to the markets? And what does it do for world economy? See, that was the bullishness that I thought in the copper was going to work. I expected, right now is when I expected it, that in the June timeframe, at least the European Central Bank would begin cutting rates, and now Canada's done it, and yet copper's not picking itself up. See, to me, that means something fundamentally isn't right there. It should have, I think, run more on that news, and I'm very disappointed in that. When I look at the dollar index, here is your argument that's going to be answered maybe as soon as Friday for us all. Certainly part of it tomorrow. The question I'm going to pose to you, if the U.S. holds higher for longer, let's just assume that the numbers that come out in the jobs report aren't super weak, okay? They're stable. Doesn't give you a lot of reason that we have to break just yet. Maybe the June numbers will weaken more, so on and so forth. But let's just assume that. And it keeps us here. And we've just seen the Bank of Canada's cutting. Now we're seeing that the European Central Bank wants to cut. What happens to those currencies versus the dollar? Do they go up because now the aid is coming to them? The banks are cutting rates. It may be one and done. It might be a series of them. We don't know how aggressive they have to be yet. They'll all say one thing. They're cutting. They're going to wait. They're going to see what goes on, blah, blah, blah. Although the Bank of Canada really didn't say that. They said they expect to have more cuts. So that was very impressive. Had they been super aggressive, they could have gone 50 basis points and said, maybe we'll look and see what's going on, but they're going to take it in steps. Okay. So is that bullish or bearish the dollar? Because the dollar's down to the support of the 100-day average. When we come over, well, you'll see in the euro as we get into the next video, the financial market video, what it means there. And I think you want to look at that because it's important. And I'll be covering why the stock market rallied, what's going on all through that in that video. Now, for those of you that are market techies and you want to learn technical indicators, our guide to price charts, our guide to chart patterns put together with Modern Trader over the years, I think you'll find this phenomenal. As you can see, There's clear graphics on everything. It comes to you as a PDF. It will talk about, like, for example, my oscillators, the slow stochastics, moving averages. You will hear window envelopes, market sentiment. There'll be talk about commitment of traders reports, the Dow, the Elliott, Fibonacci, and Gann, all the examples showing you what they look like, how people work with them, price-time relationship, the Arun indicator, a very important indicator, and you should learn what that's about. A great options primer, in my opinion, and money management. I mean, all of it's got to come together if you're going to go anywhere with it. How do you get all this? You simply go to iraepstein.com, and on the left there'll be free offers, but you can put that in. You can move your cursor to the top here. You'll see an icon, give it a click. And you'll see all the free offers. This is a good one for you to choose. We'll send it out to you as the PDF, and away you go. I'm Ira. You have yourself a great evening, and I'll talk to you all in the next videos or see you in the morning.